Hello. Welcome to the PivotBoss Premium Trading Room. I'm Frank Ochoa, aka PivotBoss. Welcome to the room. You should be able to hear my voice right now. If you can, you can give me a yes or Y. But basically, this is just going to be very informal here. I'm going to be reviewing some stocks, but first I'm going to review the market, and we're going to take a peek at the market from a higher time frame perspective and then kind of drill down to the lower time frames a little bit and get an idea of what's going on in the charts. And then from there, if we decide there's some decent directional conviction here coming up, then we could be looking at perhaps some stock scans that could help us find some opportunities. So basically, we're going to go ahead and get started here. But welcome everyone. Again, my name is Frank Ochoa, aka PivotBoss. If you go to PivotBoss.com, and I know many of you are familiar with me, some of you may not be familiar with me, but if you go to PivotBoss.com, you can get a lot more information here. You can learn about my book, Secrets of a Pivot Boss. You can learn more about our PivotBoss Premium Trading Room, our PivotBoss Masters Training, any free content we may have available, and of course, it's a great website that's archived very cleanly and easily so that you can navigate around here. So you can check more about that at pivotboss.com. Let's see, here is our premium trading room dashboard. Let me check for the upcoming day here, Tuesday, July 12, 2016. We have FOMC members Tarullo and Bullard speaking, in addition to Kashkari, 10-year note auction, and the JOLTS job openings. So really nothing super major here until we have crude oil inventories coming up Wednesday, and then we go on throughout the week. All right, let's take a look now. So what we're going to do, let's take a look at the ES first. And I'm going to bring up the higher time frame here. So this is a daily time frame chart. This is a 1-year composite profile and a 1-year look back right here. Typically speaking, I use a 5-year composite volume profile. This one's a 1-year, which is fine because really we've only stayed up here for the last year or two. So we've been trading in this zone. We have a nice composite VPOC here at 2087, value high 2106 here, value low 1943. At least on this composite, not the cleanest, not as clean as my market delta, but it still gives us what we need to know. One thing that we've been using is this price range from here to here. This is basically the August high, swing high, and then it sold off until it found this low right here. After it found that low, it bounced back to the midpoint of that range, and now we have a very important key range that we've been playing off of. And it was this key range that's helped me identify that we would rally here, that we were losing steam here and perhaps headed back to here, and that we were rejecting here and we were headed back up to here. So I've used this range over the last year very successfully, especially in the trading room throughout the first part of this year as well. A lot of great trading movement and moves have come off this key range here. So what I'm doing right now is really looking to see how price is responding in relation to this range. So recently here, you see prices come into it and dropped off of it, came above it and then dropped back, came above it again on Brexit and dropped back, and now we're back to it yet again. We came to it, a little bit pullback, and now we're through it. One thing that we've been mentioning here with regards to the market, especially for our premium traders in the trading room, was that down here, when we were rejecting off of these levels down here, I mentioned that we'd likely see a move back toward the 2061 or 2072s. I forgot which one it was at the time, but the composite VPOC at the time, I believe it was 2061 or 2070. And we were looking for a move to this zone. And after a move to that zone, we were looking for it to go into a trading range heading into the summer. So we've nailed not only the direction and when the rejection was occurring, but also how price would auction heading into the summer. Now here's the thing that I told my traders, even all the way back in February. I remember saying that once we do get up here, though, I believe that in July to August we may see a sell-off back down. So that's been my primary thinking so far, because while the market is sitting, yes, near all-time highs, you can see here that every time it's gotten to and above certain areas, anything above 2100, it's been offered. It's been offered. It hasn't shown or demonstrated any ability to see acceptance and new buying that's going to spark additional strength. So until we see that, I'm a little skeptical. Instead, what I see is price trading within an expanding range here that we've had on the radar since it started developing. And that's what's helped us identify early on what was going on, to stay away until we saw rejection, then bring it back, till we see rejection and bring it back, until we see rejection and bring it back, right? So we've been on this range ever since, and even recently Brexit helped further define the range. So up here we have across these highs, beneath these lows, very, very clear expanding range or megaphone pattern. And we have a very clean resistance level at 2120 here that comes across. You can see resistance here, and it comes back. So price is trading above that level. And this is very important now, because if we're at the edge of this range and trading above this 2120 resistance, if there's any signs of rejection up here, any signs of rejection, you're likely going to see downside sell stops get triggered back below 2120, which could then in turn lead to the next correction back against the range, this time perhaps at the midpoint of the key range, which would coincide with new lows in the expanding range. So I'm watching for signs of rejection. I'm watching for signs that prices are going to reject above 2120, and it may not be in one day. I told our traders this morning, it may not be in one day, it may not be in 2 days, it could be 3 days. It could sit up here for a little bit before it finally pulls back. And I kind of go back to history all the time. When prices sat above this high here, and we got above it that week, I mentioned, here's a rejection, and you got to be careful, because if they don't get paid up here, the stops are going to come out. Here was day 2, and I mentioned, okay, it's day 2, but they're not really getting paid. Here's D3. Yes, you've got 3 days of bulls defending that level, but they're not getting paid. Watch the stops, and the stops came out. And that's how we targeted that this thing was likely going to see a move against the range. Down here, we were looking for a 1940 hit, and we got it. Or a 2040 rather, and we got it. So we've been watching for certain cues in the market. Now, when those cues don't pan out or don't play out in a way that we thought they could, we kind of step away from the market. So right now, this is what I'm looking at. I'm really good about identifying rejections in the charts. So when you get a rejection here, for example, you look for price to pull back and form an absorption signature, and you look to squeeze, right? And that's what we've been looking for time and time again. So we've been on this pretty nicely. What I'm looking for, again, is at 2120, and that's the pivot that I have our traders watching in the trading room. If over the next couple of days we trade up in this area and build out within this range, but we don't push to new highs and continue higher, if we're sitting here on Tuesday and we've only done this, right? If we're sitting here on Wednesday and it's only done that, these stops down here start to become at risk, and that's when you see momentum move in that direction. So that's what I'll be watching. I'm going to be looking for some signs of rejection. One thing to keep an eye on in the upcoming days, in overnight trading, do we test the overnight low first, or the previous low, or the previous high in overnight trading? Which one do we do first? Because if we come into the high first and then we can't hold and start to reject, that could be a quick retest at 2120 as this thing looks to establish more of a range. So I'll be watching for this very closely. Again, I'm not someone who makes a prediction every single day about what's going to happen. What I do is I patiently stalk and I patiently look for those levels that we're looking for in the charts to be hit, and then from there, once a rejection occurs, we look to defend and we look to squeeze to very clear targets in the charts. Right now, the primary idea that I see coming up is a potential reversal across the range, but that could change, right? So we have to just see how it plays out. If this thing starts to push higher, then we do have the next level above. And the next level above that I'm looking at is 2172. 2172 is the next major target to the upside. as it is the 25% expansion of this key August range from last year. That's been the range that the trading range has been basing off of. So this would be the 25% expansion. So if we reach this target, maybe a first test fade opportunity back toward the high. At this point, they'll try to defend and squeeze. So that's what it's going to look like if this thing starts to become bullish, or at least that's the framework that I'll be looking for as this thing begins to unfold. Now that's just kind of a pure price and volume perspective. So what I do is called what I call the PivotBoss methodology, or the PVV method, which is price, volume, and value. So we just looked at price. There's no indicators on the chart, right? There's no indicators on this chart. All we looked at is price here, this price range. We're looking at price. We're looking at price structure. We're looking at what's happening. The other thing we looked at was volume here, volume at price. So this is the volume profile, and we're looking at value. Where's value in the charts? Well, right now, 2087 is value. That's very important. Top of values here, bottom of values here, all of that's very important. So if this is the top of value, and we've seen nothing but rejection here, this is considered overvalued price territory. And the primary idea is typically to fade this back to value, right? And perhaps back to the bottom of value. So there's a lot of things to consider here, but all we've done really is look at price and volume. So that's what I'm looking for here. Now, if we take a look at some PivotBoss indicators, for example, PivotBoss pivots, here we are. There you go. All right. So here is a look at the PivotBoss pivots. And this is a monthly pivots here. And I know it's a lot to look at right now, so I'll kind of zoom in just a little bit. And what I'll do is look at just the current pivots. All right. So PivotBoss pivots are amazing. Not just because I kind of put them together, just because they work. And that's why I use them. That's why I kind of push them the way that I do, because they're looking at the actual auction. They're looking at the market, right? It's using the previous high. This white line right here is the previous high, whether it's the previous session's high, previous week's high, previous month's high, whatever you define it. These are monthly pivots right here. So what it's using, my PivotBoss pivots look at the previous month's high, the previous month's low, and then the previous month's close. And those are 3 pivots. Those are the main pivots. From that information, you can then get the pivot range, right? The pivot range made famous by logical trader, right? Fisher. And this is the high plus low plus close divided by 3. That's the pivot point. So you take the high plus the low plus the close, divide that figure by 3, and you get this point right here. This level down here is the midpoint between the high and the low. So it's the high plus the low divided by 2 gives you the midpoint of the range. And then from there you take this differential and you project it higher from the pivot, and that gives you the pivot range. So that's the previous auction's key levels. So the previous auction being the previous month's auction. And these are the auction's key levels. Now if you get outside that range, now you have extensions. You have extensions now. So this range right here, from here to here, that's the previous month's range. This right here is 25% of the previous month's range, forecasted higher from the previous month's high. That's 50% expansion, 75, 100. Very simple. Very simple, very effective, extremely effective, because that's the way that the algorithms and the programs are designed to trade the market. They look at the raw auction prices, and from there, they look for high probability areas to fade and also areas to target. And in this case, these are very, very powerful. So what I'm going to be looking for here is the weekly. Let's take a look at the weekly pivots here. And again, what I want to do weekly here, and I'm going to look at the previous periods as well. So it's going to come up with a lot of pivots here. So back-to-back weeks, what I'm seeing right now based off of pivot-based analysis, which is a concept that I talk about in my book, Secrets of a Pivot Boss. Higher value relationship, so here's a pivot range from last week. This week's pivot range is, where is it? Right here, right? From here, here, and here. So that's this week's pivot range. And so you can see this one up here is completely higher than this one down here. That's a higher value relationship, higher value. That tells you that the market has been going up and it's in an uptrending market. When this one is higher than this one, and when this one's higher than this one, the market has been trending up. If this one is lower, month over month, then there's been a down move for the most part, right? That's just basically speaking. So whenever price pulls back to the pivot range in an uptrending environment, that's usually where bulls look to defend for another squeeze opportunity to new highs. So that's something to consider right now. If this thing does reject, there could be at least some sort of bounce back toward 2104s. That bounce would likely have a retest opportunity back toward the previous month's close or high, and from there, it could be either a failure back down across the range or this thing would squeeze further. So right now, still trending higher. So 2120 is a big time level to watch. If we drop into the lower time frame here, we'll go into the intraday. We were watching 2135 as a key zone to fade and any level above 2133. So we went into today thinking that today could be a trading range market. And it was for the most part. It was a trading range market, but it was an upward sloping trading range market for the most part. Upward sloping trading range market. Made for very difficult, identifying difficult, the edges were very difficult to identify just because it was just new high after new high. These were one tick new highs, one tick new high, one tick new high. Then it comes up a couple points in it, so it wasn't as clean. Down here it was much cleaner, which tells you that the bulls have been in control, right? Up here was much more sluggish. But right now, the key zone to watch is going to be the previous session's range. It's going to be very important. Anytime you get a major rally like we've seen, and especially the previous day, like this Friday right here, major trending move based off of NFP. After that move, you tend to see a trading range market. So right away, as soon as we got into the trading room this morning, I mentioned to our traders, today's a fade new highs, fade new lows type of day. It's likely going to be a trading range market for most of the session. And then from there, that could persist into the next day or two, or we could see some sort of significant movement. And so what I'm going to be looking for in the upcoming day is how does price respond at the edges of the current session's range. So these are going to be very important. Here's the high of the day, is 2136. Here's the low of the day, somewhere 2120s. And now I'll be watching those ranges, those edges. How is price going to respond at those edges? Because if price comes up to here first and can't go, likely you see a move back toward 2126 and perhaps a move down to squeeze, and then you see a follow-up move back up. So we're not at an actionable point just yet. I think that there could be a little bit more upside price discovery until we see the rejection point. So that's very, very important. You got to be able to see the rejection point. Let's take a look at something else. Let's look at crude oil here. Crude oil is very important here because there's a major pivot that the entire market's watching. Awesome. Great job. All right, so right here, this is very important here. This key range is 51.67, and this one right here is 45.91. So basically, crude oil, very similar to that ES chart we just looked at, started on an expanding type of pattern, right? Started doing this, and we kind of saw it early. Then up here, it finds this high, so we were looking for some low. Then after it finds that low, it hits the midpoint. Now that defines the range. This impulse move, when price rallies, it can't go any higher and then sells off until it can't go any lower and then bounces back to the midpoint, that impulse range, what I call the key range, is very, very important market-generated information. This is a market-generated move where the market establishes that range and now trading range behavior happens inside that range until expansion occurs, right? The market goes between trending phases and trading range phases, right? A price discovery phase, imbalance, and over here is a trading range, balanced market, two-way trade. So what's happening right now is the bottom of that range is being violated. We saw price go offered right through it on this day. And then right here we saw bears defend it. And we knew that would be the case. We absolutely knew that would be the case. We called it in our room that watch for that behavior. And then on the day 2 here, I mentioned that look for bears to do it again. Look for bears to defend right in that area again. That's the primary idea for a shot at new lows. Now here's the thing that I told the room though. I said, now just because these bears are defending here doesn't mean they win. Doesn't mean they win. That means that there are now buy stops above. So trading is a game about understanding who's positioned where. Understanding if they're getting paid, where their stops are. That's the information you need to know as a trader. So with these bears, they took prices offered here. Then they defended here and defended here. So bears are clearly in control right now. They're defending off of this level here, and their buy stops are above it. So if, for example, a major iceberg order or something comes in here, major passive buyer with limit order, huge limit orders that absorb all of these sellers down here and then are able to run the stops above 46s, that's going to spark a very aggressive short squeeze all the way back up the chain here. And so that's what I'm watching for. Right now, the primary idea is still that bears are defending this level for 43.03. But watch for cues that any stops get run above 46s, because above 46s, this thing aggressively returns back to 48 and perhaps 48.79 and higher. So just keep that in mind. For right now, as long as bears remain in control here, 43.03 is a great target. Prior support here, previous resistance, it's the 50% expansion of the key range. So bears have this target to play to. One level to watch in the upcoming session is going to be that midpoint. So the midpoint of the day is going to be very important. So right now that midpoint is 45.10. Price closed near the low of the day. So if price bounces into the midpoint of the day, is the midpoint generally being offered, or is price seeing acceptance above it? See, it was offered generally here, thus leaving the wicks and price is headed lower. So that's going to be something to watch out for. If price pops above here and starting to see acceptance, that could be a precursor to these 46 stops getting run and a short squeeze ensuing. So just keep that in mind. But right now, these are your key levels. Here, 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 and it's all based off of this impulse range. Just fantastic. On an intraday basis, let's take a look at what this crude oil looks like on an intraday here. So here's the intraday basis. This is a 512 tick chart, and this is the 45.91s, about right here. So you can see again, price comes down below it, they're defending and defending and defending. But if they get stifled down here, the stops could easily come out above this level, and boom, there's clear air right to 48. Clear air, right? So that's something to consider. But right now we have a little bit of a balanced range down here. So fading the edges is a great idea. So if you look at this range right here, very balanced as this thing just trades above and below, above and below. So right here, the early idea, again, watch the range. If we open the session and we're trading 44.40 in overnight trading and all of a sudden we pop back above it, that could be a clean shot to 46s. If price gets up here, it could be a clean shot right back down. I wanted to say a few words on gold. I'm not going to spend a whole lot of time on it right now. We've had gold pegged pretty nicely here since the beginning of the year. And, when prices were super tightly coiled, I mentioned let's watch for a breakout and look for a massive move to occur. When they started to break to the upside, I said buy the first pullback and target this level, right? So we've been looking for certain cues. I said the up move is going to stop when you see a blow off top, which we got here, and from there we're going to form a range. We did. And so we've done a lot of great analysis with gold. We've seen a lot of great precision reversals off of some of our zones here. But right now, it's hard to tell. It's just going up, but it's doing so kind of in a very volatile manner, and it's very, very tough trade right now. So I can give you a little bit of analysis in terms of gold, but I just have to say with a caveat, it's been very volatile. I've mentioned it to our traders as well that hey, it's like a rodeo right now. Gold is the bull that's trying to buck everyone off, and it's working. You have to be able to be patient. Right now it is going up, but sometimes it's being violently thrown back and forth. The best time to get into gold lately has been after selling pressure, and then after you see some sort of rejection. Here's our rejection day that I talk about, and then here's our absorption signature off to the right, and then there's the squeeze, right? Oh, check this out as well. You know what I was just talking about in crude oil? Here's what I was just talking about in crude oil. You see this sell-off right here? You see this major selling pressure, boom, down, and then it holds for 2 days right there and right there. And I said, just because they're doing that doesn't mean they win. I said, because the stops above that level can get run, and then that's going to be a major move up. This is the exact same pattern that I'm talking about in crude right now. Right now, we're on day 2. And if we come down here and fail to hold below the low, what was that, 44.40? That could start a move like this. So this is basically the conclusion of what I'm talking about. But this is the type of thing that happens in both directions all the time, right? That's just market dynamics. But this one right here has been very, very bullish, but it's been extremely volatile as well. So I would stay away from it for now, unless you've already built up a position where you're comfortable in it. Because if not, if you're trying to initiate a new trade, I think the risk is too high at these levels. So you have to be patient with this one. Lastly, here's the NQ. The NQ is nice because we have 45.50 right here. 45.50 is a very important level. It's a key level for us, as you can see on the chart. So if I come here and kind of scroll out on a 5-year basis, over the last couple of years, you can see right here 45.50. Look at how clean that level is. Here, here, here. Chopped around it here, chopped around it there, and then it comes back to being clean again. Well, we're right at that level again. We're right there at it. And so this is an important level to watch on an intraday basis to see how prices respond. But what I mentioned to our traders today is that because we're coming into this zone now, we could begin to find some sort of rejection day on these highs. And whenever we do see it, we'll know it. Whenever it develops, we'll know it, and from there we'll look to fade it back, because what we have is a fantastic impulse low. We've seen a big move up. Now if we find the high, that could be the impulse high, and we could have a significant key range now to play off of, perhaps into the end of the year. I mean, that could be that big of a range, or at least takes us through the end of the summer. So this is going to be very, very important to see how it plays out. Now with the NQ, we're at a key zone up here, but we're right at the center of a larger range as well. This thing is starting to diamond pattern out. Diamond patterns tend to be unstable. So these larger diamond patterns usually break to the downside. At least they're very ominous and could foretell a major sell-off. So a diamond pattern basically looks like this, and then looks like that, and then comes down like this and looks like this. We don't, it's still developing in this range, but anytime you form a pattern like that, it can be very significant, because what's happening is it expanded the coil outward, and now it's reversing the coil inward, and then that's just before you see significant expansion. Significant expansion. And to think that the market's going to break to the upside after a significant rally that we've seen over the years, for me, it's hard to tell, but you know, I'm always a fan of letting it sell off first and then being a buyer and bringing it back up. So even if we do rally from here, you know, it's hard. It's tough up here. That's why the market's had tough go at trying to find acceptance up here, because savvy traders are not buying it up here. They're distributing their positions. They're liquidating at these levels, right? That's why it doesn't get new buying. So in this zone, I would say between 45.50 and 4600 is a zone to watch over the next day or two or three for signs of rejection. If you see signs of rejection, you may see a move against the range very similar to what we just saw recently, and that'll start bringing you back toward 4100, 4200. So that's the early idea with the NQ. So those are a few thoughts here on a higher time frame perspective for various markets, from the ES, crude oil, gold, and the NQ. What I wanted to do here was do some scans as well. So basically, I have some fun scans that I usually pull out just to see if we find some good things. Let's. This isn't a scan. So we'll go based off of some weekly scans. What I wanted to do, number one, let's go off of a 5-day wide scan here. So what I want to do is look at some instances here. And let me do something over here. Okay, so Alcoa is out. 15. You see the big push up. Okay, so Alcoa is the first one on the scan. Right now, what is showing on the scan, what we're looking at, is what I want to see is a high range move over the last 3 to 5 days. A big, big move. So right here, you have that high, you have this low, you have that big swing move up. And should you find rejection at these highs, it's usually a very, very easy fade opportunity back to value. So you can see with Alcoa here, I mean, it's mostly in a trading range like this. You know, it's been expanding even as well. Every time it gets to a new high, right, it fades back down. It gets to a new high, it fades back down. It just got to a new high. Is it going to fade on the news here? What's going to be the deal? Every time it gets down here to a new low, it fades back up, right? Here's a new low, it fades back up. So that's just the short-term idea, is that when we look at this scan where we're looking for a 5-day ride rate scan, we're looking for a big push up like this or push down, whichever way it goes, but we want to see rejection. Right now we're not seeing rejection just yet, but in the upcoming day, this one could be a very important one to watch, because if there's some sort of tail that develops up here after failing to hold above the previous month's high perhaps, that could be a quick fade back to value. Composite value right now, 947. So just something to consider there. So that's just what this scan is supposed to look like. So for example, here it is again. Look at this 3-day wide ranging scan, very, very wide. The way I measure it is if you go to load style and bring up the ADR here. The way we're measuring it is we're using the PivotBoss Advanced ADR indicator right here. And basically, anytime this thing is way greater than average, I want to know about it. And so that's what it's showing me. So it's showing me this move on a 5-day basis. That 5-day range from here to here is significantly greater than average 5-day range. Because look what had happened before. Look at this. 1, 2, 3, 4, 5 from here to here. I mean, look at that tiny little 5-day range, and then look at this super huge 5-day range. When you have something that goes that far out, it's like stretching that rubber band, right? Let go of this end of the rubber band, and it's going to snap back in the opposite direction. And so this is another opportunity here to watch for a potential snapback. One thing I typically do, again, since we're looking at impulse ranges, is perhaps we can use this low bring it up to this high, and then find the midpoint of that range. And then should price reject in the upcoming day, it could be a quick fade back down. So that's what we're looking for. Now, whether this one is a tradable opportunity just yet, I usually like to see a little bit better circumstances or a little cleaner rejection, but that one's still pretty good. Here's one again where you have some sort of expanding range. We've seen that be a player here, right, in the larger and broader markets. This is one that could be good as well. Right here above the highs, and we're seeing rejection. The midpoint of this range is 54.92. That's that golden dot or that yellow dot right there is the median price. So it's basically the midpoint of the day's range. And so if I find a day that I think that's a rejection day, which this could very well be a rejection day, what I like to see is for price to open the next session below the midpoint and then rally into it. And then here is where you would set an entry. It's called the midpoint retest entry, and from there you look to defend and sell, and then you bring it back to support, or perhaps run the stops a little bit. So right now, this one is lining up to be one of my favorites among the ones we've been looking at so far, at least, because we have a clear discernible pattern. We have a nice move up. We're seeing a clean rejection day. So right now, those 54.50s, 54.40s is looking pretty good. Oh, it's 54.90 rather, sorry. 54.92 looking really good. And then the other thing we can do is I'll bring up my weekly bear target right here. So these levels right here are my PivotBoss ADR method targets. And what they do is they look for a recent high or low, and they look to project a target in the opposite direction using average daily range. So you see this red dot up here? That's saying that's the high of the week. Now we don't know if that's the high of the week, but we have to guess sometimes, right? If we're going to put a bet and sell this market, then we got to believe that that's the high of the week, right? So if that's the high of the week, which it currently is, then we can project lower 100% of average weekly range. Average weekly range being the high minus the low of the week, that's the range, and then averaging that over the last 10 weeks. That gives you this target right here, 51.32. So on average over the last 10 weeks, if this remains the high, on average, price will go to this level by the end of the week. On average. But the market doesn't always trade in perfect averages, right? And so instead, we use this target as our primary target. By we, I mean those traders in the PivotBoss community, those traders that use our PivotBoss approaches. So that's the 75% ADR target. This target right here is the 50% ADR target. So this would be considered a scaling target. So if you got short right here off the midpoint at 54.92, you can scale, say a quarter of your trade right here at 53.52. Then you can scale half of your trade at the primary target at 52.42. And then you can scale your last quarter of the trade at 51.32. If this is the distance from your entry to your first scale, then use that same distance and project it higher. And that's your stop. So that would be your stop here. That would be your entry. That would be your first target. So you can structure it in a way that if you reach your first target, you can leave your stop in the same spot and you're not going to get hurt, right? Depending upon how you want to scale. And so that's very important. So this one's one that I like a lot. I'll be keeping an eye on that one. That's a sell candidate, AMBA. Let's see if we can find one more here before we call it quits here. Look at this one right here. This is something like what I was talking about. You see this right here? Impulse move up. Boom, big rally. up to here, and then you see a major rejection here and a big tail, right? So this stock came up under this scan yesterday as well, as it did today as well. And then this is what I mentioned before. Find the midpoint of that range. Find the midpoint of that range and then look to defend it and sell it. If price opens below it and it rallies into it, look for bears to defend it and sell it. It makes for a much better entry opportunity than trying to get in upon a break of the previous session's low or get in, wherever. It's a much better starting point. Now, most of the time, it's not always like that. You have to find rejections. That's what's important. You have to find rejections in the chart. And here, the midpoint doesn't matter as much because the market's going sideways. It's the edges. It's the edges that always matter. It's the outliers. So I'll flip through a few more of these charts here and see if we can find something nice. Big time move here in Nucor. Nice rejection here. This one's Taser. Let's take a look at Taser on a weekly here. Look at Taser. Here's the weekly chart of Taser. If you see this 28 level and bring it across right here, it was resistance. Then price went bid through it here, and then price defended it here and went up and formed another market structure here until it failed to hold above that market structure here, made resistance, and now we're back, right? So at first blush here, 28s are significant. Prices above there significantly rejected even after it traded. Right here you got an LVN. So this is a good spot to be watching for rejection back down if it's going to reject, right? And again, this is a weekly chart, so if I bring it down to a 5-year or 5-year daily composite, this is what it looks like on a daily chart. And so this is a hard trade sometimes. I mean, this thing just rallied significantly, and now you're expected to sell it. But trading always has to be, it's one of those things. It's counterintuitive sometimes, right? And when you think about it in this way, say you had bought something here. Say you bought, a collectible. A $500 guitar that's a collectible, and then all of a sudden, you don't want to sell, 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 and it's like, well, we're offering you, $5,000 now for that same guitar, and you bought $500 for. At some point, they entice everyone to sell because that's what the market does. It auctions higher in order to entice sellers. And at some point, it's going to find a rejection, and when it does, that could be the high of that auction, and then now you could be looking for this thing to snap back and perhaps fill the gap or snap back to the midpoint of the range. So Taser right now is on that 28 key level. So if we bring it back right here again, here's the 28. So let's mark that right here. So I'm going to right click right here and add a key level. And that's 28. So this will be something to watch out for, is how price responds around 28s. Because if it cannot hold, it's an easy call that this thing can flip right back toward 22s. That wouldn't be a primary target, but it's an easy call. So one thing I'd be watching out for is this low right here and measuring the midpoint from that high. And so we can do that real quickly by taking the low here at 22.25, right clicking and adding a Fibonacci retracement. Oops. Right clicking and adding a Fibonacci retracement. And then you take it to the high, which is 28.58. There it is. So the midpoint of the range is 25.42. The gap close is here, just above it. Those are important zones right there to watch, at least short term, if this turns out to be a rejection above 28s. And so far, it's looking that way. So I would say here's 28. The midpoint is 28.04. We close below the previous session's high. If price comes into 28s, look to defend it there as a seller, right? If price rejects off that level, you want to see price close below the previous session's low, right? So you're going to get a lower high and a lower low. It's ideally what you would see. Something like that. And maybe this thing just continues lower. So this is what we're looking for, but we'll see how this continues to play out. Now, if price, say price gaps up in the upcoming day, above the midpoint, then the trade's off for me. I'm very, very stern about if this is 28s and I want to sell 28s, price needs to open below it and rally into it. Price can't be up here and mess around. Because if this is a rejection day, then this is rejection. So why would price be up here trading again? So if price gets above there and starts to trade into the tail, the trade's over. This thing is still in a price discovery phase. So you have to know when to get out and just cut the trade, right? So this is one to watch here. Watch 28s. If there's rejection there, it could be a nice fade opportunity back down. This 26.79 is a primary bear target for the week. This already seems to be kind of a high range week and some increased volatility, so you may see a swing move all the way into 26.35 and perhaps even lower. That 25.42 would be perhaps the major area to target on this way down. So not bad. Taser there, looking pretty decent. I'm going to go ahead and add that one as well. So you can see that I didn't bring up a bearish scan. The last one in that scan is here. I didn't bring up a bearish scan. I brought up a high range scan. And what it showed me was a lot of stocks that had rallied significantly lately, but now are starting to see natural rejection on these highs. And again, that's oftentimes one of the times to fade back if rejection occurs. So those are a couple of key things that I'll be watching as we head into the upcoming session. Again, for those of you that are not familiar with me, I'm Frank Ochoa, aka Pivot Boss. You can go to pivotboss.com and take a look at my website and take a look at some of what we offer. You can go to the Start Here page and it'll tell you a little bit more about what we have. Free content, a lot of great stuff. My book is Secrets of a Pivot Boss. This book here, I've only gotten great reviews from traders all over the world. It's just a phenomenal book that folks really, really love. Pivot Boss Premium Trading Room, you can be in the trading room every single day for just $19.95 for the first 2 weeks. And after that, it's just $99 a month if you want to stick around. But it's not just the trading room at such a great price. You get so much more as well, including access to our Pivot Boss Premium Dashboard. The dashboard has a lot of great on-demand training. It has a lot of great resources and indicators and scans and all kinds of great things. If you click on demand here, we have a 10-part executive training series. This training series here is divided into 11 parts actually, and they're brief snippets between 30 and 45-minute clips for the most part that pretty much lay out our entire methodology in a way that you want to absorb it. Presentation notes, and you can click on that and start to get the quick slides so that you get the information right away. We have a premium replay gallery here where you can flip through and replay certain portions of the trading room that were very beneficial that our traders asked to keep so that they'd have it in the archive. For example, analyzing the market after Brexit. This is the morning after it happened, and this is how I analyzed it according to auction market theory and price and volume and price structure. Down here, this is our premium chart gallery. So if I click on this button here, we have Tag Cloud that I've already clicked on, but if I click on this button, I start to get all these fantastic charts with a custom slideshow where I can just scroll through chart after chart after chart, annotating everything. So it's a great resource library for those traders that want to learn. Even more premium video galleries with a lot of great videos here to learn about different things that we do. Feature presentation that teaches you. It's a 2-hour presentation on Pivot Boss Pivots. So a lot of great things. Just this is a tip of the iceberg thing. And again, you get access to all this for just $19.95 for 2 weeks. And if you want to keep it after that, it's $99. So This is where you can find me. Again, we also have PivotBoss Masters. PivotBoss Masters is our major training arm, and this is where our Masters traders find the bulk of our training. And from here, you can learn more or join Masters. But if you click on Learn More, you'll get a great feel for what the training's all about. We have a core training that we did in various modules here, from theory, analysis, and execution, and taught all these various concepts that are all archived along with training tools. And then we have our proprietary training, where we have training based off of PivotBoss proprietary indicators and tools like PivotBoss pivots, PivotBoss bands, the PivotBoss ADR method, and also PivotBoss PIMA method. So a lot of great things here for everyone. All of the analysis we do can be accomplished and executed in every time frame on any instrument. So it's all scalable. Everything I train and teach can be used by scalpers all the way up to people who invest long-term in their IRAs, 401ks, or whatever the case may be. So I designed it that way so that it could be easy for me to understand, and hopefully it could be easy for everyone else to understand. So it's a process that's very, very simple to apply to any single instrument you want to trade in any time frame. And once you learn the very basics of what we're doing, I mean, it really, really helps to kind of open your eyes to how the market operates so that you can find some of those fantastic opportunities. So thank you all for hanging out with me today. I hope to do this every day this week, because I've been away from the market a little time here with 4th of July and also some vacation time. So I wanted to get back out here and show a little bit about what we're doing. So thank you so much for hanging out today. I appreciate all of you for joining me this afternoon, and we'll see how these opportunities play out in the upcoming week. So thank you so much. Trade well and take care.